Welcome to another morning market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, as always, we're going to start with a brief overview of how the markets have started in European trade this morning. We are seeing equity markets higher across the board. This appears to be being broadly driven by the rebound in oil prices, where we're seeing Brent Crude and WTI up around 2% today, lifted really by the API inventory figure last night, which was far above expectations. We were expecting a small decline, a small build in inventories here, and instead we actually got a moderate decline. So we are seeing prices being supported by this early on this morning. We've also heard from Russian and OPEC energy ministers who are meeting at the energy conference later on in April, where they're expected to continue to discuss this oil price freeze. So I think really everything this morning and the data last night really is supportive of oil markets today, and that appears to be lifting the entire market. In the FX space, we are seeing more of a dollar-driven moves. The dollar is up by around, I think, about 0.2% so far today. So the dollar does seem to be driving the currency space so far in the session. The broader commodity markets do appear to be a little bit lower at this stage, with oil, like I say, continuing to show the biggest improvements here. Now, if we move on to what we've got in store so far today, we are also seeing, I should say, markets being lifted by that Caix and China Services PMI reading for March. Came in ahead of expectations at 52.2, up from 51.2. There was one downside to this. While activity does appear to be picking up and input prices are rising, which potentially signals future inflation, the downside to this was that employment actually contracted for the first time since August 2014, I think it is, and overall employment on the composite level, which includes manufacturing and services, actually fell to its lowest or contracted at its fastest rate since I think it was around January 2009. So slightly negative news on the employment front here, but input prices are rising and overall activity does appear to be picking up. So I think that's providing another lift for the market so far today, potentially contributing as well to the strength that we're seeing in the Australian dollar. Obviously the two countries very heavily connected from a trade perspective. Looking ahead to today, it's looking relatively quiet in the European session. We've had the only one notable piece of data being the industrial production figure from Germany. We do have the focus really this afternoon is going to be on the Fed. We've got the FOMC minutes being released later on. This is where we're going to find out more information about how big a consensus there was in terms of not raising rates, of course, in March, and what the outlook really is for rates. We know that they've cut the forecast from 4 rate hikes this year to 2. We'll hopefully find out more about why they reduced the forecast so significantly, what drove this, and how far away I guess we are from a consensus. We'll also get more idea of this as well from the FOMC speeches that we've got today. We've got Mester speaking later on. We've also got James Bullard speaking as well later on this evening. You can see from the FedWatch tool right now that the prospects of a rate hike in April seem to be extraordinarily slim. I'd be given that the current rate probability based on Fed funds futures, I'd be extremely surprised if the Fed did actually opt to raise rates now in April. They do tend to try and get markets in line before they do actually raise their interest rates. So the fact that the markets are currently pricing out any prospect of a rate hike this year in April suggests to me that if the Fed is even considering raising rates in the next few months, that the April meeting will probably be used to realign market expectations with their own, rather than actually raise interest rates at the meeting itself. We've also got EIA crude inventories as well today, so that's worth keeping an eye on as well. Following that API number last night, the EIA, of course, is the official reading, so if we see anything different from this, then we could potentially see a reversal in the oil markets from those gains, which have come overnight broadly off the back of that API figure. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.